Hi everyone, it is Tuesday the 17th of March. It's middle of the day, it's just gone past lunchtime, or it's early afternoon, and I want to have a look at the markets. I'm going to do basically I'm going to look across all the different markets and talk about what the technicals are indicating ahead of tonight's FOMC. There are some. Why am I doing this? Well, because predominantly there are some concerns about inflation starting to rear its ugly head in the US, and therefore the eyes are on the Fed to see if they have any intentions to perhaps change interest rates ahead of that. The general indication at this point in time is that if there's, kind of in my experience, if they are concerned about spooking the markets in any way, they will generally alert people via various social media platforms or in their language as to whether they have any intentions or any concerns about the interest rates or about inflation or about the economy. Generally speaking, there don't appear to be any signs of that. And the intention at this time is for no changes. And so the reason I think that there's slightly more eyes than normal on tonight's FOMC is really the question is, are they surprised? Are they now perhaps changing their language because they have been taken by surprise, and therefore is that something we need to be concerned about? So taking a look at the dollar index at the moment, just looking at it on the daily, for example, it is broken out of a recent local daily range, broken up above 91, pulled back into the moving averages, back into the previous highs of early February, produced a bullish candle, and actually what it's doing now is attempting to get back over the line of 92, and there's a little bit of a kind of a bottleneck occurring in terms of price over there. So the indication at this point in time is for the US dollar to actually strengthen, but it's sitting right on the fence of 92. Okay, then having a look at it on a weekly perspective, or from a weekly perspective, it is in an uptrend, high lows, high highs. So actually I've marked here on the calendar, on the monthly chart, I beg your pardon, you can actually see here that it's in a downtrend, lower highs, lower lows. And actually, let's have a look at this in a little bit more detail. The dollar, my concern predominantly with this is that the dollar index is still stuck within a range. All right, from, say, let's call it 100 down towards 89 and a low end of sort of 87. It's stuck within this range. Now, the reason that's a concern for me is that it just, the markets, the currency markets, I want to see real change. When I was starting out learning how to trade, there were some incredible trends. Some of the best opportunities were sitting on the CHF pairs, the Swissy pairs, and the JPY pairs, and they were just really decent money-making opportunities by comparison to today. The JPY pairs are a bit twitchy, so are the CHF pairs, and it's reduced the number of kind of opportunities. Trends don't necessarily run as long as they can, and JPY kind of has a mind of its own. So, and part of this is most likely to do with just trying to keep kind of the economy is relatively stable for the foreseeable future. And so when I look at the dollar index, what I see here is that it's particularly range bound, and as long as that remains range bound, it really means that trends are going to be relatively short-lived, and we have to look elsewhere for them, meaning we have to look for some of the other pairs to produce them rather than the majors. And so it's a pity that we can't just depend on the majors to provide us with really good trading opportunities on a regular basis. And so I believe that that will be the case once we break outside of this range. The longer we're stuck in this range, once we do break out, the moves are going to be quite aggressive. And so looking at it here, it was currently in a downtrend, so we had a weakening US dollar. We are at a point here where, yes, it is possible that dollar could continue to weaken over the next, certainly over March and April. Could find that for the rest of 2021, the market tends down towards 87. And I think once it breaks out below that, it'll start to head towards 84, which you can see here as a significant price point. And it'll trend aggressively, and then it will escape that range. But for now, or until then, it's still range bound, and therefore could potentially head up towards 95 and then head down. It can do anything. There's really no reason for it to stick with anything for any particular period of time. And so here, I'm just prepared that possibly today we could look back, and this could be that turning point where the dollar decided to strengthen and work its way back up towards 100, towards the top of that range again. And again, a reason I'm concerned about that is that could just mean that, 2022, 2023, so on and so forth, we end up staying in this range. We could be in it indefinitely. We could be in it for 10 years. And I'm just not convinced that for traders at any rate, that's really worth our while. So what I would like to see is that it resumes this trend to the downside, produces a nice little bearish candle, and heads on towards the downside, and ultimately works its way out through past 87 and heads on. That would be great for 2021, provide a lot of relatively decent money making opportunities. But that is the situation. That's where we are at the moment, and it is currently in a downtrend within this range. And so that's really the concern, but of course it can change on that. It has a downtrend on the monthly in terms of the longer term, still within a range, and but it is looking more bullish in terms of price action on the daily, and it is in an uptrend on the weekly. But it's approaching this area between the 92, 93, 94 area where it could potentially change that, and I just think that the market is likely to cause a spike. But if we look at this, we take the range into account, and we look at the price action on the daily and the weekly, it leans a little bit more towards moving to the upside. In other words, the expectation to me is a greater than 50-50 chance that price will boost to the upside. So we'll see a stronger US dollar as a result of tonight's news conference, but we'll see. And so then looking at euro dollar, so if I just kind of come back to looking at euro dollar, which of course it's possible that this can influence, what happens with the US dollar. It's currently looking to head a little bit lower, potentially look a little bit more bearish, and I would really like to see that be the case. I'd love to see the euro dollar. I'd like to see let's put it this way, I'd like to see a weaker US dollar and stronger euro, but I guess I'd be happy with anything that isn't ultimately range-like behavior. If we look at it here on a monthly basis, excuse me, it fell through 1.2. It was actually a really nice area for it to find support, and yet it fell through that. So it's not looking as strong here. So this actually leans a little bit more towards a stronger US dollar. Then having a look, so we'll look at the majors just to compare those. Sterling is quite different to the euro at the moment. Sterling has actually been inherently stronger, and it's battling to get back over 1.4 at the moment, but certainly it's generally speaking a little bit more bullish and might just be wanting to work its way up towards 1.4350 to test the top of its range, which is not necessarily the same as the euros. Looking at the Australian dollar, they've been quite nice little monthly uptrend here, but also struggling, battling with that 77.50 level. If we could break through that, we'll see price head towards 0.81. Kiwi dollar is struggling also with resistance at that level, and of course that's 7,300. And any pullbacks down towards, let's call it down towards 0.7 or 0.69 is quite feasible. So we might actually get a weaker Kiwi in the foreseeable future, and that'll be one of the ones that'll buckle if we do get a stronger US dollar. Then moving on to dollar yen. So dollar yen, if we bring up that monthly chart, look at it in the bigger time frame again, this is also largely range bound. Part of that will have to do with the Bank of Japan and exports and their own personal relationships with the US, as well as their own monetary policy. You can see here, if you look at price action dwindling down, going lower towards the bottom of the range, the price action being sort of twitchy, in other words, lots of wicks above and below on the candles, whereas looking at the most recent ones, we can see they're solid full candles. There's a different kind of a participation when it's moving to the upside. It's a much more committed versus a lot more noisy to the downside. So, and generally speaking, that just implies the price is happier when it's closer to the center of this range than when it starts to get towards the edge. And this was something I've spoken about in the last 6 months, where as we approach the bottom of the range, it's very possible for price to come back into that range. It's struggling, and so here it actually makes a little bit more sense for dollar yen to head back up towards, at least back up to 111.70, which implies a stronger US dollar on that situation. So right now we're seeing on the US dollar, we see that there is that possibility. We're seeing a little bit more evidence hinting at a stronger US dollar for the foreseeable future, not a weaker US dollar, which is what I said I would like, but it's not about what I want. It's about what the market's going to do. Now, if we then have a look at dollar Swissy, we had a downtrend of lower highs, lower lows. We have actually broken the high of September 2020. We've broken that, so that downtrend is no longer a factor anymore. That's done, which means now we have to really wait and see what the market's going to do. Is it going to come back up into these lows, produce a bit of a rejection there, and then continue lower, or is it just largely going to stay within this range that it's been in, going all the way back to 2012, call it 2011, 2012? It's been range bound, and so therefore for it to stay within that is quite likely, and we're still halfway through it anyway. So just to show you what the markets used to be like, when I said to you when I was just getting out learning how to trade, the markets were trending beautifully, and this is what it was like. And this is what it was like for years. Look at that, from 2000 all the way down to 2011. For 10 years, it just trended beautifully, and this is what it's been like for the subsequent 10 years. And so it's just not ideal. And I'd really like to see us return to those types of conditions. And this, if you dig a little deeper, we'll most likely find that some of that's related to quantitative easing and, kind of different policies that have been acted and stimulus. And those are certainly things that have become other cogs that are standard in the markets today. And there's a little bit too much correlation in terms of timing of those coming in as factors and the currency markets, interest rates. I mean, a very obvious thing is interest rates, differences between the central banks around the world. They've all started to get quite low, and so the carry trade is not as popular. That's where we would effectively trade the difference between the interest rates between different currency pairs. It's not really a factor anymore, and that is tied to economies and trying to stimulate growth, and so stimulus cash and QE becoming a factor of that. And so all of that stuff is kind of within the same bucket. And so I think that there's some correlation there time-wise. Okay, let's move on and finish off with dollar CAD, then we'll have a look at gold. So again, dollar CAD now down towards the bottom of its range. If we get a much stronger US dollar, we'll get that reaction. It'll work its way back up into the range. So the point of this video is, first of all, to also show you how many of these major pairs are stuck within a range. And they have been for a long time, for years. And so we have to just be aware of that no matter how good the trends are at the moment, that could potentially change. We could be at the early stages of a change there. Then moving on to gold. So one quick thought just before I move away from currencies is that because the majors don't necessarily offer any opportunities, that's not at all to say that there aren't amazing trends on some of the other currency pairs. So if you look at some of the JPY crosses now, you've got some really great trends. Becoming a little bit overextended, case in point, but certainly we've had some amazing trends recently, and you can see Aussie yen as well looking pretty good. We've had some good ones, CAD yen as well, potentially also. So that's just off the top of my head, certainly over the last couple of weeks. And so the trends are there. They're just not necessarily with the majors, which would be great to see them there. Okay, so let's move on and have a look at what is the state of gold. If we look at gold at the moment, we can see that we've obviously got an established downtrend on the daily. We've got lower highs, lower lows on the weekly. So we have a downtrend on the weekly. And actually, you could argue that technically we've got lower highs, lower lows on the monthly. And so that really brings into perspective that, gold not necessarily looking as strong as it has if we talk about 2019, early 2020. So it's still looking relatively bearish. It's also at a point here where it is potentially wanting to hit a little bit lower. For me, there's a possibility we could see gold increase up to 1,800. So 1,800 is really going to be a key level for gold. If we can get back over 1,800, we'll see gold likely strengthen from that point onwards. As price then heads above 1,800, it'll likely become much more bullish on a monthly basis, implying, especially if it closes above that, implying that it's intending to head a lot higher. So for now, taking the fact that we have a daily downtrend at the moment into account, I've noticed or I've marked these key levels 1680, 1550. These are kind of historical levels, and really these are levels where I would anticipate the gold will change direction. At the moment, it is more bearish than bullish. Look, it's perfectly acceptable for it to climb up a bit, do a retracement, back up into these key levels, perhaps into Fibonacci levels, and then continue down. So, the fact that gold for the currently is looking more bearish than bullish is, perfectly acceptable. And so I'm keeping my technical options open for shorting opportunities on gold, and also at the same time, looking to see how it reacts above 1,800. It starts to look more bullish, as though it's returning to a longer term uptrend, and until it does that, certainly once it breaks below 1680, it starts to imply that it's going to head down towards, say, 1550. So again, no clear direction, but certainly gold. And again, like I said, tonight it would be nice to see, or interesting to see, if we get some sort of a spike, which then pushes gold back up above these levels. Is it possible to get a strong US dollar and gold be in demand? Of course it is. Is it possible to get a weak US dollar and, gold kind of not be in demand? Of course it is. So there isn't a fixed, although it can be correlated at times, it's not a universal law like the law of gravity. And so just be very careful of sort of getting that idea. Okay, so let's have a look at silver by comparison. So silver is climbing a bit more to the upside. It certainly is a little bit more bullish than bearish, certainly wanting to test that $30 ceiling quite a bit more, but it's not really great for traders. There's no clear trend there. Let's have a look at, say, copper by comparison. Copper just needs to take a bit of a breather. It's been trending beautifully. It's very much overextended and I'd love to see this come back down to sort of 3.6, 3.45, test that, the sort of area around here on the weekly, certainly test that for support and then potentially resume that uptrend. Let's have a look at platinum by comparison. Platinum, much more bullish on a weekly basis, struggling to find a few buyers above this area, but the point is the trend is more to the upside, so that's looking more bullish. And then palladium finishing off is actually starting to test the tops of this limit. It's been range bound for a while. It's been we had a really nice run throughout 2020 and then a bit of a correction, which is normal, and it wants to go past that 2,500. It's very keen to do that. It's stuck within this range, but I have to say right now it's looking more likely, almost as though it's going to be able to do that soon in the near future. Okay, looking more bullish there. A little bit of an uptrend here, technically still stuck within that range, but once it breaks out, it'll likely continue. So this could provide us some traders with some money making opportunities in the near future if we can just get past that zone and work its way to the upside. So let's just recap on that sort of copper, platinum, palladium, and silver in that particular order, looking quite bullish. Gold, not looking as bullish, but again, it's unlikely that the rest of them would all be bullish, and gold would just fail to do that. So that's why I just exercise a little bit of caution, but there's no doubt that gold's current trends on the daily and weekly and monthly are to the downside, so we just can't ignore that. If you're an investor, you might, if I was investing, I might want to say now's a good time to buy gold and hold it for 2 to 5 years because it's at a discount, but I also have to accept the reality that gold could head lower. All right. As a trader, I would more likely be positioning myself for shorter term moves to the downside rather than moves to the upside until gold has demonstrated that it is now actually trending to the upside. Then moving on to crude oil, so West Texas Intermediate oil, nice monthly uptrend, that weekly looking good. A little bit of a retracement or a correction back down towards $60 would be very nice and healthy. Not a problem there, but it looks like it might want to consolidate for the time being across the highs and then carry on. So that's also been a really nice trend, and I was quite bearish on it going back all the way back to September, end of 2020. Once we broke that high, we went into a confirmed technical uptrend. It has been one of the best performance in terms of quality of trends. Brent going through almost identical types of behavior, looking for a bit of a retracement back down to $60 on the weekly would do it well, and then potentially to continue up to 74. So yeah, it's a very real possibility that oil can head up to $74. I'll deal with it at that point. And as I said, any kind of a minor correction down to $60 before then would also be welcome. We might see again that it just attempts to break through, go up, tap 74, and then have a deeper correction. That's also a possibility. I'm just prepared for both. Finishing off with light crude, just to compare here, you can see light crude bumping its head up against 68 on the weekly, also wanting to do a bit of a correction down towards $60 before perhaps continuing up to $75. So all of those showing that they still have, on the monthly at any rate, have room to go to the upside, but also on the weekly showing that they might want to take a bit of a breather for a week or two before resuming that. For me, it's always just, let's see how that goes, because we've had trends have been incredibly overextended lately, which is obviously hints at being in a bit of a bubble. So then moving on to cryptos, let's just have a quick look at cryptos. They're not necessarily as susceptible to FOMC in the same way, but here, generally speaking, nice and bullish, starting to show some bearish divergence, not looking as strong there. Certainly a little bit overextended on the weekly at 60,000 for Bitcoin, and on the monthly, if you just compare it to the very first bubble, back all the way back here, which tapped out at 20,000, we're now sitting at about 3 times that. Certainly it could do with a correction. Where would that correction come down to? Anywhere from the 40,000 down to that 20,000 mark, if that was going to be the case. There's plenty of room for correction on cryptos, if that was to be the case, and still be healthy, still within the longer term. Ethereum looking as though it's also starting to become a little bit exhausted. Anytime we get a bit of a correction on that, could even come down to 1,000 on that and still do relatively well. So but at the moment, just showing that generally speaking still trending to the upside. And then finally, let's have a look at the global indices. So global indices generally nice and bullish on both the weekly, on the daily, on the monthly, generally speaking. The Dow doing incredibly well. Just noting here on this level here with the S&P that there's definite kind of a bit of divergence, bearish divergence showing in here, just saying that it's a little bit tired, but in every other respect it looks pretty good. Okay, it's looking nice and bullish there. So the question is, will this be impacted? Well, it depends on whatever the monetary policy is, but so far certainly trying. That weekly basis, the weekly chart for the NASDAQ letting off quite a bit of steam. You can see here on the monthly clearly price action rejecting those sort of 14,000 highs. A little bit of exhaustion, but the current candle looking potentially nice and bullish. Again, I would have loved for it to come back down, tap 12,000 before potentially looking to carry on. We'll see how that ultimately unfolds, but in the weekly looking nice and bullish. We've broken the high of last week. Generally speaking, this would imply that the market wants to head back up towards 14,000. Okay, the daily downtrend is now almost been broken. If we can break these highs here around that 13, let's just see what the high of 25th of February is, the high of 13,348. So if we get to 13,350, we've then ended that daily downtrend, and then we're officially looking as though it's already created that swing on the weekly. So that's likely what it's going to do. Let's have a look at the Russell 2000. Russell 2000 definitely showing some bearish divergence there. The weekly looks okay. It looks as though it might want to come back and have a bit of a correction. So on some of the charts, the weeklies look as though they're ready for a deeper correction now. Some of the monthlies have already been, they're all well overextended. So I've been talking about this for a while. I sound to myself like a broken record, and I'd like to see what happens with, obviously at some point I'd like to see price have a correction on the monthly time frames. Some of the dailies look as though they're topping out a little bit, and the weeklies looking nice. I mean, we have strong uptrends, and I don't want to say the sky's falling when it isn't, but certainly at some point when you get a fresh high, then a pullback, and just a slightly higher high, and then a pullback again, could be a bit of a hint at the market wanting to do a deeper correction. Let's have a look at the FTSE. FTSE here looking more bullish than bearish, starting to had some rejections here and starting to push through those, so that's quite a good sign so far. The DAX looking nice and healthy. Okay, broken through its resistance levels. The French CAC also looking relatively nice and healthy. Stocks, Euro stocks also again looking nice and healthy. The Nikkei also a little bit overextended here, but overall. So again, aside from the monthlies, which would be welcome, which I think would be very good for them to have a bit of a monthly retracement, most of the charts are looking relatively decent. And what's interesting to me is the NASDAQ, which was without a doubt the most kind of aggressive of the lots, has had a bit of a correction, let off some steam, but the rest have continued to climb anyway. So that's all, to me, I see those as relatively positive signs. Just noting how with the ASX, it is definitely struggling around that 6-8 level to get past that. And doesn't look as kind of bullish around on either the weekly or the daily. So that one not necessarily looking as enthusiastic about climbing higher. So just to recap, looking at the global indices, of course, in terms of a monthly picture, I'd love to see them have a couple of months for correction. And that might end up happening, one of those kind of May to June, July sort of options before we pick up again in October. They would fall within the usual annual cycles. But the dailies and weeklies currently looking okay. And so the expectation for those at the moment appears to be that they would be bullish regardless of tonight's FOMC announcement. I run a little bit long on this video. It's 22 minutes going on 23 minutes, and I apologize for that. I do hope you found it useful. I wanted to cover all the markets in one video, and let's just see how things ultimately, how the markets, if there's any shock reactions to it. But so far the market's positioning themselves ahead of that. They are implying that they anticipate seeing a slightly stronger US dollar, but that's like a 55-45 difference, leaning just a little bit more towards a stronger US dollar. And hopefully we get some trends that kick off once this is done and we're past it. So maybe we get some good trades in between now and Friday. And that's it. Thank you very much. By the way, as always, I would thank you to like this video, and if you haven't subscribed, to do me a kindness please and subscribe, and then get alerts for any videos that I do. So